Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, February 23rd. It is a blizzard here in New York City, but we have got a great show for you today. First up, we have an in-depth look at how Starlink is now taking on mass-market telecom giants. Our Elon Musk reporter joins us for that conversation. Once we're done with Starlink, we're then turning our attention to Stargate to look at the deep dive that we published over the weekend about how OpenAI is navigating some of the hurdles with that massive data center effort. We'll then get into one of the biggest stories of the week, Nvidia's upcoming quarterly results. We've got an analyst from D.A. Davidson who will join us to preview what we should be watching for. And we will wrap the show with a conversation with the CEO of Otter AI, the company that is at the center of the AI speech-to-text conversation. It's going to be a fun show to kick off the week, so let's get right on into it. Starlink's internet offering has become the dominant source of revenue for SpaceX, which is expected to go public as soon as this year. The Information's Elon Musk reporter Theo Wayt has an exclusive story out today diving deep into the ways in which Starlink has now become a competitor to mass-market telecommunications giants. And plus, Amazon's satellite offering means there is going to be even more competition coming. To break down the inside story of where Starlink is at, I want to bring on Theo to tell us more about his reporting. Theo, welcome back to the show. It's great to have you here.
Good to be here.
Explain to us what the scope of Starlink's current operations are.
So right now, the biggest business by far for Starlink is selling consumer internet terminals that you put on the roof of your house or your RV or your boat, and then you pay a monthly subscription fee to get internet access. And they also have all kinds of other much smaller businesses, but that's the main thing at this point.
And the idea here mainly is that it's remote regions, right? These are regions around the world that wouldn't otherwise be covered by the telecom giants.
At the beginning, that was the idea, and the first kind of Starlink power users were people in RVs, people in cabins that want to take a Zoom call or stream a movie. But there's only so many of those people. And at this point, what I found is that Starlink is getting more into competing with Comcast, AT&T, big telecoms that, exist in a lot of the US, but, might not, reach as many people with as fast of internet as they would like, and kind of ex-urban areas, and Starlink needs to win some of those people over to keep growing.
So I want to talk about that. I want you to unpack that. But before we get there, what does Elon Musk ultimately hope Starlink will become? What is all this in pursuit of?
I mean, really what it was in pursuit of originally was he wanted a profitable business that could make money so they could spend money on going to Mars. Like, it was kind of this ancillary stepping stone toward funding the rest of SpaceX's mission. That's changed a little bit now, because now he's talking about data centers in space and the moon more than Mars. But the vision was always like, let's figure out a way to make it a profitable business to fund all these other SpaceX missions.
Okay, so unpack for us some of your reporting here on how SpaceX is going head to head with these telecom giants. Is there particular regions or particular companies it's trying to tackle head on? Are there changes it's making with its product? How is it doing this?
Yeah, so when Starlink launched a few years ago, it was this premium thing that you'd get for your boat or your cabin, and you would order it online. You'd pay hundreds and hundreds of dollars for the terminal. You'd pay more than $100 a month for service, and it was a kind of niche premium product. Now they're opening stores. They recently opened a store in a mall in Nebraska, and they're opening a couple of other physical stores. They did a Super Bowl ad. Like, they're doing all these things that like Comcast or AT&T would have done in the past, and they're introducing cheaper plans that are competitive, and all of it is kind of making them into this like mass market competitor to traditional wired telecoms that they weren't before. They're kind of looking more and more like a conventional company in that way.
And how cheap are the plans getting now?
Like $50 in the US, which is cheaper than I pay for internet in New York.
Okay, so you can currently get a Starlink and the internet is just as good as Verizon or Comcast?
Not necessarily. Like it depends. The cheaper plans have higher caps on speeds and things like that than the
Right.
more expensive plans. But
So
the point is they're going after people that don't want to spend a crazy amount of money for a premium service.
right. And I mean, again, going back to the end goal with all this, I mean, the big question is why? I mean, is it just trying to make money now to fund those space efforts? I mean, is this an effort to get ahead of Amazon, who you also wrote is a competitor here? What's the rationale?
Yeah, I think there are two things. I mean, the first is they want to show large, huge growth ahead of the IPO. Like Starlink just hit 10 million users. I think it was last week, and that's like double from a year earlier. So they want to show that this server, there's demand for this service, and it's growing. And then yeah, Amazon is the other factor here, because Amazon has this service called Amazon Leo that is going to launch later this year. That is the first kind of real rival to Starlink, in the sense that it will provide pretty fast satellite internet service. And Amazon has a lot of advantages. I mean, all they have to do is put a product on the homepage of their website, and millions of people are going to see it. And they have a huge base of AWS customers they can upsell. Like, there are a lot of advantages that they have that SpaceX, I think, recognizes and wants to get ahead of by getting as many users signed up now as they possibly can.
You were an Amazon reporter here at the Information before you started covering all things Elon Musk, and this is kind of the intersection between all of the things that you've been reporting on. With Amazon Leo, I mean, is this all stemming from Jeff Bezos's interest in space and the whole Blue Origin story, or where did the inception of Leo really come from?
I think that, like, I think the people that work on Leo really don't want it to be conflated with Blue Origin. Like, I think
Okay.
that there's some sensitivity there, right? Because this is like a business within Amazon that is actually quite separate from Blue Origin. And I think they see it more as like an extension of AWS, on the enterprise side, or an extension of Prime. And it's kind of the same. It's almost like the same rationale for launching any Amazon service, where if you give people in more remote regions better internet access, you can also sell them Prime Video subscriptions, and you can also maybe get them to buy stuff on your website. Like, there's this like flywheel that Amazon sees Leo playing a part in, that I think makes a lot of sense, and is.
So this is not a Jeff Bezos moonshot idea. This is actually sort of the next step of AWS for the people there.
I think so. I think so. I mean,
Okay.
obviously, like, I'm sure Bezos is enthusiastic about it, but I think that, Blue Origin's mission is kind of separate in a lot of ways.
So now let's bring it back to SpaceX now. So I'm thinking about some of the challenges that the company might have to overcome to compete with these mass market telecom giants. As you said, one thing that comes to mind is, I mean, Starlink it's a global network in some ways, whereas telecom giants, I mean, they sort of have an advantage, I guess, of focusing on maybe one country or continent. I mean, how that's got to be like almost an insurmountable challenge, is getting approval in like every different country to offer internet to all these different regions.
Yeah, I mean, in an ideal world, like, the most profitable version of Starlink would be one that exists in North Korea and China and Russia and Iran, and like all these other countries that, are not going to be okay with Starlink existing. And it's really interesting, like, as a challenge for the company. It's like, the most profitable version of the service exists in every country in the world, and that is not actually possible. And so SpaceX, wants to be in as many places as possible, because they're leaving money on the table when they can't service a place. But they've had a lot of challenges. I mean, they still haven't launched in India, which they wanted to do years ago. There are big parts of Africa, including Elon's home country of South Africa, that they still can't service. So yeah, the regulatory hurdles are very, very large, and
When
still,
you say the most profitable version of this service exists in every country, what do you mean by that?
like, satellites, they rotate the whole Earth, and when they're floating above a part of the Earth that you can't make money from, you're leaving money on the table, essentially. Like, right now, there are Starlink satellites I'm sure above Russia or above China somewhere that just aren't making money. But as soon as they rotate back around and are above, Europe or the US, they're going to be making money. And so ideally, you're servicing everyone everywhere all the time.
Right, right. So now looking ahead here, what sorts of news or what sorts of events are you sort of watching for on the horizon here with Starlink here? I mean, we know that they have this application with the FCC to put 1 million satellites in space. We've talked about the how big a lift that is. So, I mean, short of getting more satellites in space, which probably will be a gradual story. I mean, are there acute decision points that you're watching for or news that you're hunting for?
Yeah, I mean, there's the launch of Amazon Leo that's going to be, that's going to put a lot of pressure on SpaceX. There's the question of, when they'll get approval, if they'll get approval to launch in India and lots of Africa. And then there's this other direct to sell business that they have, which is currently much smaller than their consumer broadband business, but they're spending a bunch of money to buy spectrum to do direct to sell service that we'll have to see how they actually monetize that. Will they do a deal with Apple? Will they do deals with more telecoms? That's to be seen.
Great. Well, Theo, I want to thank you for coming on. That is Theo Wayt, our Elon Musk reporter here at The Information.
Thanks.
OpenAI's data center and compute capacity has been a story with ripple effects across much of the sector, with big financiers and cloud giants and chip companies all getting involved. The Information's cloud and compute reporter, Anissa Gardizy, published an in-depth article highlighting how OpenAI has built up its capacity over time, how Stargate has played a role in that, and also what some of the challenges are that they have had to overcome. I want to bring on Anissa to help us understand all of her reporting. Anissa, welcome back to the show. It's great to have you here.
Thanks, Akash.
So this story that you published was really interesting to me because it was one of the most comprehensive looks that we've seen into everything that Stargate has been through since its inception early last year. And what I want to do is I want to walk people through the timeline of all of these developments. And before we do that, I just want you to tell us very quickly, where is Stargate at today? Let's just get that on the table.
Sure. So today, if you're hearing the word Stargate, it refers to any of OpenAI's many plans to secure compute capacity.
Okay. Just OpenAI. It's solely their effort to get all their compute efforts.
Yeah, OpenAI uses the word Stargate to refer to their all of their efforts to secure compute. But as I'm sure we'll talk about, it started out as something very different.
Okay, so today it's OpenAI. Let's rewind now. January 2025, we have the big White House announcement. It was Donald Trump standing next to Larry Ellison, Masayoshi Son, Sam Altman. We're going to do all this compute in the U.S. What was it supposed to be, and what happened?
Yeah, so those three executives made this giant proclamation to the world that they were launching Stargate, which was supposed to be a joint venture between Oracle, SoftBank, and OpenAI. And the big headline numbers were, an investment of 500 billion for 10 gigawatts of data center capacity. And they were planning to do that in the following years. So that was the big announcement. And then the joint venture was supposed to go and pursue that vision. And as we learned in talking to people who were involved in the effort, that is not exactly what took place after that White House announcement.
What took place then? What happened?
So those three companies, Oracle, SoftBank, and OpenAI, had to come to the table and figure out how are they actually going to structure this effort. The announcement itself had come together within a matter of days. It was kind of cobbled together, and then they had to figure out, what is this joint venture? Who has ownership of it? How is this joint venture going to control data centers? Inside OpenAI, they had a few visions for what the Stargate was going to be. One of those options that we reported was they were thinking about spinning out Stargate as a separate entity. And employees who work on Stargate today at OpenAI were, they kind of thought that they might be going to that separate entity. OpenAI also thought that Stargate could just be a financing vehicle where, it's a separate, structure that investors could invest in, and the money would go solely toward OpenAI data centers. But, the three parties were not, they did create this LLC, but in terms of like actual projects, they did not pursue any. So Oracle, OpenAI, SoftBank, all were kind of scouting, sites in the US to find out where might we actually want to build these data centers. But that work, importantly, was happening in like a disjointed way. OpenAI would visit a site, Oracle would visit a site, and they couldn't really give developers a clear answer on who was going to be doing what.
And I just want to make something clear, though. I mean, at the outset, though, I mean, was all this, these 10 gigawatts of compute, I mean, all of these players were involved in the effort. Was this all to be used by OpenAI even at the outset?
For sure. It was for OpenAI's
Okay.
compute capacity. I mean, we've reported a little bit on OpenAI's plans to maybe sell computing in the future if it has extra, but yeah, it was all for OpenAI. This was, OpenAI's answer to how do we get enough compute because they couldn't get enough from Microsoft at the time.
Okay. So we have these sort of disjoint efforts here, visiting sites. Ultimately, what you reported in your story is that OpenAI then decided they were going to do this on their own, then without the partners at some point.
Yeah, OpenAI expected that a large portion of the 10 gigawatts would be owned and operated data centers, and they weren't sure where Oracle or SoftBank would play in that. But as we reported in the spring, OpenAI realized that it would be very hard for it to itself raise billions of dollars to build out a data center. It's, as we've noted in several different projects, the way to secure the best project financing is to have an investment grade tenant. And so in the spring, the Stargate team at OpenAI ended up having another meeting with Oracle, the executive team. And they said, look, what if we actually did, 4.5 gigawatts together instead of, what we're currently doing, which is, a project by project conversation. And so OpenAI told Oracle, let's do 4.5 gigawatts together. And one benefit was that, they both viewed that by doing a large 4.5 gigawatt deal, they could kind of spread out the risk that projects might get delayed or they would come online at different times and they could sort of play around with different timelines. So that's kind of how they came to the idea that they would do one massive 4.5 gigawatt deal.
So this was OpenAI saying, "Hey, it's a little disorganized here at the start. We think maybe we can build these data centers on our own." They go out, they try to pull together some kind of an effort, and then they decide this is too big a lift, and then they come right back to Oracle and the original parties with Stargate, and they say, maybe let's not start with 10 gigawatts. Let's go to 4.5. And so now we're sort of back at sort of a smaller version of what the original Stargate was supposed to be.
Yeah, essentially, I think 4.5 is still a really large number,
You're
and
right.
they were signing other compute deals as well. But yeah, there was the decision to go to Oracle for the 4.5, and then at the same time, OpenAI, still wanted to do its own data centers. So they were still at that time, as we get to 10 gigawatts, like what can we do on our own?
Okay, so they haven't given up that idea of doing data centers on their own entirely. They've just said we can't only do that. We have to lean on Stargate to some extent to get this compute.
That's right.
Okay, so now they're dual tracking it. They're saying we're doing Stargate, we're doing our own data centers. Timelines for this are still fuzzy. Do we have any updated timelines on when we're expecting any of these data centers to be constructed, or are they being built right now?
I mean, in total, this is a multi-year effort. And so Stargate, ideally, was kind of timed to President Trump's term. But yeah, you're right. They have all these things going on at the same time. And after that big Oracle deal, then they started working with SoftBank on another kind of data center relationship. So lots of moving parts. But yeah, to your question, this kind of capacity, even though it's committed, and they're working on contracts for it. It is not yet deployed.
Okay. Now tell me, what is the net impact of all of these disjointed efforts? Maybe not disjointed, maybe they're coordinated now. It's kind of hard to tell who's talking to who, but clearly there's something happening. What's the net impact on the product roadmap that OpenAI has, and then ultimately its finances? Because all of this was in pursuit eventually of of generating free cash flow, and we know that revenue hasn't really been the problem. How are the two tied?
Yeah, I mean, what we found in our reporting, which I think is widely known, is that OpenAI's revenue is quite tied to compute, and their ability to train advanced models is also directly tied to how much compute they have. And so, I think it's fair to say that as Stargate kind of dragged on last year and they were pursuing multiple different ideas, that did cost them some time. One thing we did report was that by the end of 2025, they were supposed to have 10 gigawatts with Oracle and SoftBank, and they had 7.5. Now, 7.5 is still many, many gigawatts. And so, it's hard to say that that's a bad thing, but I think the time it took to figure this out, as we reported, they were scrambling to sign deals with other companies like Amazon and Google. And so I think I think on the whole, OpenAI still has access to a lot of compute, and they got very close to that 10 gigawatts. But every company in this space is constrained by compute. So I'm sure that OpenAI competitors like Anthropic will be studying the playbook and trying to make sure that they can do the same thing very quickly.
And so, what should we be watching for here in terms of this story moving forward? Should we be watching for the data center developers to make announcements saying, "Hey, we've got 1, 2, 3 gigabytes, gigawatts, gigawatts up and running"? Is it going to be OpenAI saying, "Hey, we've secured this amount of finance"? I mean, we know they're raising funding, but what should we be looking for?
Yeah, I think one thing that I'll be looking for in particular is how OpenAI decides to structure some of the chip purchase agreements. Because on that 4.5 gigawatts, Oracle has already signaled to investors that it might not be on the hook itself to buy the chips. Its customer might bring its own chips, or there could be interesting leasing arrangements. So, this is just kind of a scale we haven't seen before. And so I'm sure that OpenAI will be talking to Nvidia, talking to Oracle about some creative way to structure the financing side of things, because, that many gigawatts is going to require hundreds of billions of dollars on chips and other data center infrastructure. So we'll be very interested to see what happens on the financing side in the future.
Great. Anissa, I want to thank you for coming on. That is Anissa Gardizy, our cloud and compute reporter here at The Information. Nvidia reports its quarterly results this Wednesday after the market closes. Shares have been flat this year so far. Over the past 6 months, it is up around 5%. There are a number of headlines people will be watching for guidance on: chip sales in China, impacts of the memory chip supply chain crunch, updates on the Vera Rubin family of chips. To break it all down, I want to bring on Gil Luria, Managing Director and Head of Technology Research at D.A. Davidson. Gil, welcome back to the show. It's great to have you here.
Thanks for having me.
What are investors going to be watching for this week with Nvidia earnings?
Yeah, I think those are the main items. So first of all, investors want to see that Nvidia is still on track. The growth is still out of this world. I mean, there's a company growing from 200 billion to over 300 billion. So everybody's going to want to make sure that we're still on track. Then we're going to ask some more specific questions around China. How many of these H200 chips have we sold? Do we still have inventory? There'll be questions about memory and the impact of the much higher prices for memory chips on Nvidia. How much of it is going to impact margins? How much are they going to pass on to consumers? And then investors are going to want to hear about next year and the year after that. But I doubt we're going to get much on that. But that'll still be an area of interest. And then there may be questions about OpenAI and the investments there. There appears to be some confusion about that, but it is a very important venture for Nvidia to invest that much in OpenAI. So there are likely to be questions on that as well.
When we've had you on the show previously and other analysts, we've talked about Nvidia as a bellwether for the AI sector at large. Do you still think that it is that bellwether? I mean, will we see the entire market and cloud companies, AI companies, software companies, everyone used to move based on Nvidia results? Is that going to happen this week as well?
Probably not. I think we're past that stage with Nvidia. Part of it is that they've raised the bar so high that everybody expects them to exceed it. So there's a little less tension. but they also can't exceed it by as much as they used to because the numbers are so big. So it's less of a bellwether. Plus, now there's this notion that Google may have won, and that comes with TPUs, not GPUs. So the AI trade that was really NVIDIA centric for a while has now expanded to more Google and Broadcom and AMD and the optical companies and the memory companies. And what's really interesting right now is that those stocks are reflecting a more optimistic view of AI, an investment cycle that could last for several years, while Nvidia's stock is actually trading at a multiple that implies that this may be peak year. So at 24 times earnings, Nvidia is trading at only a slight premium to the market, in spite of the fact that it's growing revenue at 50% with 75% gross margins. If Nvidia can show that it will continue to grow at all into next year, that's the opportunity, because if you look at the memory chips and the optical chips and Google and Broadcom and AMD, those stocks are implying that the AI cycle will continue for a much longer period of time.
Why do you say that? Why do those stocks indicate that to you?
Their multiples are significantly higher than they used to be. And to justify the multiple, especially if you're looking at Broadcom or AMD or the memory companies, you'd have to believe that there's follow through in the AI investment cycle that will keep the demand for those products going. Where with Nvidia, again, this is on the low end of their historical multiple range, meaning this is setting up an expectation for the cycle to peak this year. For you to believe that AMD and Broadcom are worth more than 30 times earnings, you have to believe that the investment cycle will continue and ramp up for them, which would only happen if there's more capex next year than this year. AMD and Broadcom are not going to ramp if the cycle rolls over, and yet their valuation implies that it will.
So now, looking at the recent stock price for Nvidia, we mentioned at the in the intro, it hasn't really. I mean, it hasn't moved this year. Hasn't really moved in the last 6 months. Maybe this is exactly what you're pointing to. But what will it take then to move the stock higher now? I mean, if it's not moving higher, it's moving lower, and I find it hard to believe the stock's moving lower. But at the same time, I mean, what is the catalyst then? Do you think?
Yeah, I mean, at the very latest, it's as they start looking into 2027, and we start hearing from their customers that they intend to spend more in 2027, 26. That'll probably do the trick. But to be fair to Nvidia, their stock has outperformed the rest of the Mag 6 or Mag 7, depending on how you include that, because really it's all those other companies spending on Nvidia chips. There's really a wealth transfer from Microsoft, Amazon, Google, and Meta, and Tesla to a certain extent into Nvidia. And so they have outperformed that group. But again, the trade has just broadened. The AI trade, people got a little bored with Nvidia as the AI trade and expanded it to all those other categories. That's really all that's happened. When realistically speaking, there is no AI trade without Nvidia. Nobody's building data centers without Nvidia chips as the primary component, not anytime soon. So as we get towards the latter part of the year and start hearing from companies about their capex plans for next year, that should allay the concerns that this is peak spending. And at the earliest, that's going to be the July report from Microsoft. Microsoft's on a June fiscal year end, so they're going to give some guidance into their next fiscal year, which will include 2027 on their July call. So as we go through the next couple of quarters, we're going to start getting signs that whether or not this year is peak year. And if it's not, that's how Nvidia outperforms.
Now, China is always a focus, at least on the earnings call. People are always watching for what kind of commentary the company gives around sales in China, whether or not they're even counting sales in China now, given the current export controls. I think my question is not so much what we're expecting to see, because that will change week by week. And look, we've got a whole new family of chips coming out with Vera Rubin, and I think we're going to go through the whole cycle again when people realize that the H200, it's better, but it's not even nearly what we could be getting with the Vera Rubin. So my question is not that. My question is China more or less important to Nvidia today than it was 18 months ago?
Oh, it's a lot less important. It's a rounding error right now. Whether they sell a couple of H200s or don't sell those are already in inventory. They've already been accounted for. It's just noise at this point. The much bigger question is Nvidia still in the China market? China used to be at least a quarter of Nvidia's results. Now it's again a rounding error. But in terms of the market in the future, China will continue to be at least a quarter of the global market for GPUs, for XPUs, for whatever combination of those chips you want to see. And Nvidia wants to be in that market. They're caught in the middle of an internal debate in the U.S., of the U.S.-China trade tensions, of the U.S.-China geopolitical tensions. So I don't expect this plot to be resolved anytime soon, but it is very important because it is a quarter of the global market. And if Nvidia has to cede that market, it's going to be Chinese domestic suppliers that take over that market, scale up, and then present a global threat to Nvidia in other markets. So it is very important for Nvidia. They're doing what they can, but I don't expect resolution anytime soon.
Right, and it sounds like what you're saying is it's much less important to the results as they are today and as they're being reported, but it's much more important in the sense that if Nvidia is going to get that bump that we're all looking for or expand that multiple any more than what it is right now, China is going to have to be a factor there. And so it's actually even more important than it was because this is one of the catalysts that people might be looking for.
That's right. That's right. And if they don't get that China market back, it takes up a lot of the upside, and again creates some long-term threat as the Chinese improve and ramp volumes and ramp capacity in the ecosystem that's outside of the ASML to TSMC to Nvidia ecosystem that is so dominant right now.
Last question for you. The memory chip supply chain crunch. What are you expecting there in terms of commentary, and when do you think all this gets resolved?
So for Nvidia, I wouldn't expect too much of an impact. First of all, they have very high gross margins they can absorb. It's not that much of the component of their componentry, and they can pass along the rest of it to their consumers. I'm a lot more worried about companies that make low-end PCs and low-end handsets. Not only can they not afford to buy memory, they're not even getting allocation. So if you need any of those devices, I'd go to Best Buy right now because pretty soon those devices, if they're even available, will be a lot more expensive.
Great. Gil, I want to thank you for coming on. That is Gil Luria from D.A. Davidson here on TITV.
Thank you.
AI has very much turbocharged the business of transcription, and Otter AI has had a front row seat to that story. As the company has grown, so too has competition, but the company has had more than 25 million users as of last year. Joining me now to talk about what is next for the business is Sam Liang, CEO of Otter AI. Sam, welcome to the show. It's great to have you here.
Great. Thank you for having me here.
So I think a lot of us, certainly journalists, know of Otter AI because we use Otter AI to transcribe all of our interviews. And it seems like a pretty simple product and it works well. And, it does the transcription. And I think that business has become a little more popular now as speech to text has taken off. But what is the structure of Otter AI's business today? I mean, is it really just the, consumer subscriptions, enterprise subscriptions, transcription tool? Is that it?
You're right. We are actually probably the first who created this category. Back in 2018, we launched our product with high accuracy, real-time transcription. However, as you mentioned, there are more competitors now. There are more meeting note takers. We have we have been moving beyond just meeting transcription. I'm glad that you use Otter to transcribe your interviews, but once you have dozens or hundreds or thousands of meetings, especially in enterprises, if you think about any enterprise, they have sales team, marketing team, product, engineering, Every team has tons of meetings. Today, if they just use a simple note taker, all the notes are fragmented. They're isolated individual notes. What we are trying to do is actually connect all the dots. We're building a meeting-centric knowledge base for enterprises to get more productive.
Right. So now let's talk about the competition there. I'm curious as to how you think about your differentiation strategy because, as you said, transcription is getting more competitive, and the product that you just described, which is the meeting intelligence, drawing on thousands of meetings and conversations. I mean, this is something that I'm thinking of even all the customer support companies, customer support AI companies that, they're doing it themselves with their thousands and tens of thousands of conversations. So how do you think about standing out?
Yeah, we have a new philosophy or very different philosophy. We see that voice is becoming the primary interface for enterprise intelligence. If you think about it today, more and more documents, written documents, are being generated by AI now. We see that maybe in 12 months, you will never need to write anything. Well, reporters still need to write things, but for most people in enterprises, they will rarely write anything because voice is the primary interface. So they spend most of the time. They're already spending, most roles other than engineers who write code. Most roles are already spending most of the time in meetings using voice. And then, Google Document, Notion, any data in the database, CRM, everything will be written by AI. Um, so what we do is to optimize the voice communication and optimize the synthesis of information, connecting dots across multiple meetings, not just the one meeting, but all the meeting series. In your team, a lot of teams have recurring weekly meetings or bi-weekly meetings, and connect the dots between meetings. Between different departments, as I said, sales, marketing, product, engineering, design, um, to create this a meeting context layer. And we're also incorporating data from document, from email, from Slack messages. With all this, then we build the agentic workflow on top of that.
So
Um,
I'm with you, and I think that's a really compelling offering. I guess my question is again, why does Otter have a leg up here compared to, I don't know, why couldn't Salesforce do this? You mentioned Slack, you mentioned uh, all the other dozens of transcription tools. I mean, what is the moat here for your company?
Well, there's several modes. One is a data and user mode. You mentioned 25 million. Actually, we have that number has increased a lot. We have more than 35 million users now. We've been doing the longest. We have the biggest voice data set, hundreds of millions of hours of voice data. And then also, again, this product philosophy, I don't see most of the other players doing this, building a meeting-centric knowledge base. Most players still staying at the individual meeting note taker stage. Even Microsoft, Zoom, if you look at their product, I don't know if you use their product for meeting notes. They just generate a basic meeting summary, meeting transcription summary, but without a cohesive system that organize hundreds of thousands of meeting notes that allow you to search, that allow you to create, that allow you to organize it based on projects and based on teams. Um, so it just that product philosophy, we're way ahead of everyone. Not most people haven't realized the power of that knowledge base yet.
So you got 35 million users. How big is the company now in terms of revenue?
We announced that we were over $100 million in ARR last year, but
That's when it was 25 million users.
yeah.
So
We're way higher than that. We haven't announced our latest revenue numbers yet. But
I want to ask you a question about the underlying technology here. So, which models are you using in the background? What have you learned from all the different models that are coming out? And do you see, all the strength of all these models converging over time? Are you in that camp, or are you very much still fundamentally on the side of these models are going to duke it out for the next 3-4 years, and we have to pick the one that is best?
For speech recognition and speaker recognition, there are two technologies. Speaker recognition is speech recognition is technology to transcribe the voice, and the speaker recognition is technology to separate multiple speakers in the same room and also identify the voice of each speaker. So we have proprietary technologies for both. This allows us to provide higher accuracy. For example, on Zoom, if everyone speaks in a quiet environment, the transcription is relatively easy. But once you have multiple people in the same room, if there are AC running in the background, or if you're meeting someone, for reporters, you could meet someone at a restaurant or Starbucks with that background noise. Most companies' transcription will be really bad. We have this special technology to handle the background noise.
And this is a model that you have built yourself that does this?
Yeah, we built this over the last 10 years. And secondly, the speaker recognition is really critical. On Zoom today, if you have 2 or 3 speakers in one room, Zoom cannot separate them. Zoom cannot identify who is who. We are able to separate them and identify the voice of each person. This is very critical because once you want to build agentic solutions on top of the meetings, you need to know who said what and who is taking on that action items, right? Whose point of view, people may have different opinions, different ideas. You need to attribute that idea to the right person. So this is why speaker recognition is so critical. So again, by building this in-house end-to-end technologies allow us to innovate a lot faster, allow us to provide higher quality, and also, we can operate with much lower cost. If you're just using a third-party API, you're going to pay a lot to access that API.
Last question for you. As you continue to build more and more under the hood, and you start to connect the context of all these different applications that you're talking about, how do you ensure privacy through all this? How do customers know that they have the same privacy standards that was the case 5-6 years ago, maybe, when there wasn't as much to it? It was just a more simple login, transcribe, play interface.
It's not so much different than most of the other cloud-based services, right? Google Document, Gmail, or Slack. All the data is stored on the cloud. We use similar security models, encrypt the data. But also for enterprises, we have created a lot of data retention mechanism. Enterprises can configure the system to remove audio, let's say after 3 days, or remove the transcript after 30 days, and just to keep the summary. And also in terms of access, we have a very sophisticated access control system. You can specify who have access to certain content. You can create, similar to Slack, you can create private channels so that only limited number of people can access certain meetings. So there's a suite of access control and security mechanisms we're We have SOC 2 Type 2 compliance. We have a HIPAA compliance. We passed the security review of a lot of the financial companies who have the most stringent security review system.
Great. Well, Sam, I want to thank you for coming on. That is Sam Liang, the co-founder and CEO of Otter AI here on TITV.
Great. Thank you.
That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. Make sure you subscribe to the information on YouTube and follow us on X, Instagram, TikTok, and check us out wherever you get your podcasts. I'm already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.